Ongoing Australia-China trade tensions have Australian import and export businesses on edge, and for good reason. Beyond mining and live exports, Australia also relies on China for industries like international education. So what are the possible alternatives for some of our hardest hit industries? As one of the top wine producing nations in the world, many of our Australian winemakers are conceding it's time to find more reliable countries to do business with. China's decision to add an anti-dumping tariff of up to 212% on Australian wine, which took effect at the end of 2020, has seen wine exports to China plummet by up to 95%. The United Kingdom's withdrawal from the European Union has left the door open for Australia to ink new trade agreements with the UK and the EU, and many winemakers are hoping these arrangements could be a short-term fix to the China dispute. In 2019, Australia exported $64 billion worth of coal. China is our second largest customer, accounting for 21% of our coal exports worth $13.7 billion. Coal producers are hesitant to talk about the current situation, but they will be looking to shift their orders to other customers in the short term. Japan, South Korea and Taiwan have been stable customers of Australia's, and Vietnam has become an important purchaser. However, analysts say foreign government moves to cut emissions in coming decades does not bode well for Australia's coal exporters in the long term. Some Australian seafood businesses send up to 90% of their catch to China, and with restrictions caused by tense trade disputes, those businesses are at risk too. Over the Christmas period, fish has actually found alternate buyers domestically, with new deals struck at our major supermarkets. But the issue here is profit margin. China pays far more for our world-class seafood than any other customer.